The Bank of Japan raised interest rates on Friday to their highest since the 2008 global financial crisis. It also revised up its inflation forecasts, underscoring confidence that rising wages will keep inflation at around its 2% target. Bank of Japan Governor Kazuo Ueda.
When looking at the current state of the economy, there are some signs of weakness, but it is recovering moderately. In terms of wages, corporate earnings are continuing to improve, and there is a growing sense of labour shortages. There were many calls for wage increases at this year's spring labour management negotiations, as there were last year.
The decision marks its first rate hike since July last year and comes just days after the inauguration of Donald Trump. The US president is expected to keep global policymakers vigilant ahead of potential repercussions from threatened higher tariffs. At its two-day meeting concluding on Friday, the BOJ raised its short-term policy rate from 0.25% to 0.5%. The widely expected move underscores the central bank's resolve to steadily push up interest rates to around 1%. It marks another step Japan is taking away from the deflation and stagnant economic growth that's dogged the country for decades. The BOJ's future rate hike path is bound with uncertainty, though, particularly with global trade concerns. The yen rose around 0.8% after the BOJ's decision and inflation upgrades, while the two-year Japanese government bond yield rose to 0.7%, the highest since 2008.